Your credit health is a vital aspect to your financial well-being, and we're here to guide you through the do's and don'ts. Welcome to the Finance Homefront. Bev here, and in today's video, we reveal the top credit mistakes that might be holding you back and share savvy strategies to keep your score soaring. Whether you're a finance pro or just starting your money journey, these insights are transformative. Ready to supercharge your financial journey? Hit that thumbs up, subscribe, and ring the bell for all things finance wisdom. Let's elevate your credit game together, right here on Finance Homefront. Mistake number 1. Disregarding your credit. Checking your credit score regularly is a good way to keep an eye on how you're doing financially and catch potential problems before they become a big issue. If you don't check your credit often, you might miss signs of bigger problems. You can get a free copy of your credit reports from Experian, TransUnion, and Equifax through annualcreditreport.com. As you keep an eye on your credit health, look for things in your credit report that could hurt your credit score or are already causing damage. This could include having too much debt, missing payments, or having accounts you don't recognize. Fixing these issues quickly is important to keep your credit in good shape. Mistake number 2. Not paying your bills on time. Failing to pay your bills on time can have a significant negative impact on your credit score, which is heavily influenced by your payment history. Missing just one payment by 30 days or more can seriously damage your credit, and late payments typically stay on your credit reports for 7 years. Although the negative effect on your score may lessen over time, especially if you consistently make timely payments thereafter, it can still hinder the growth of your credit. To avoid this pitfall, it's necessary to ensure you pay all your bills on time. You can request payment reminders from your lenders, but an even better approach is to set up autopay through your lender or bank account. This way, your payments are automatically deducted, reducing the risk of forgetfulness and helping you maintain a positive credit history. Mistake number 3. Only making minimum payments. Only making the smallest payments on your credit card might seem like it makes your debt easier to handle, but the interest fees can make it tough on your budget. What's more, this approach could harm your credit because it raises your credit utilization rate, which is a part of your available credit that you're using. When your credit card balances go above 30% of your credit limits, it can significantly hurt your credit scores. In general, it's better to keep this percentage lower. It's important to focus on paying off your credit card debt as a priority, and think about using different ways to pay until you reach your goal. If you owe money on multiple credit cards, you might want to consider methods like the avalanche or snowball to tackle your debt. Mistake number 4. Applying for multiple credit cards at once. When you ask for credit, the lender checks your credit report with what's called a hard inquiry. If you're looking for certain loans like a mortgage or auto loan, having several inquiries close together usually doesn't hurt much because they count as one when figuring your credit score. But for credit cards, it's different. Each time you apply for several credit cards in a short time, each inquiry works against you. While one inquiry alone might only lower your credit score a bit, having many can make it worse. If you want more than one credit card, try to apply every 6 months or so. Also, take time to learn about different credit cards and understand your chances of getting approved before you apply. Experian Credit Match can help find credit cards that fit your credit profile. Mistake number 5. Taking on unnecessary credit. Borrowing money for important things like a house or a car might be necessary. Student loans are often needed for college. However, if you use student loan money for things other than education, take out a personal loan for a vacation, or build up a credit card balance buying non-essential stuff, you could end up with more debt than you can handle. This may lead to paying late or even not being able to pay at all. The easiest fix is to only ask for credit when you truly need it. That way, you won't pay extra interest for things you don't really need and won't put yourself in a tight spot financially. Mistake number 6. Closing credit card accounts. Shutting down a credit card account that's been doing well, meaning you've always paid on time, keeps its track record on your credit reports for 10 years. But if you cancel a credit card, you lose the available credit right away, which might make your credit utilization rate go up and harm your credit score. Also, your credit score won't get a boost for more on-time payments over time. It might not hurt your credit score on its own, but it could slow down its improvement. Before you decide to close a credit card, think carefully about why. If you've had trouble spending too much or want to avoid temptation, the possible impact on your credit might be worth it. The same goes if the card charges an annual fee and you're not getting enough benefits to cover it. Mistake number 7. Choosing longer auto loan terms. Getting a super long car loan might sound good because it makes your monthly payment smaller. Like an 84-month loan can make those payments less. But watch out. Longer loans can cause problems that might mess with your credit. Here's the deal. If your car loses value faster than you can pay off the loan, you might owe more than the car is worth. So if it gets wrecked or you want a new car, you might end up owing money. If you can't pay, the lender might send it to collections. Plus, with a longer loan, you'll end up paying a lot more for interest during the loan. If a big monthly payment from a shorter loan is tough, try ways to lower what you borrow. Think about putting down more money, skipping extras like a service contract, or going for a less fancy car. Mistake number 8. Becoming complacent. Taking good care of your money means you should always keep an eye on your accounts. Be active about saving and paying off debt, and find ways to manage your cash flow better. But here's the thing. When everything seems fine, especially if you've got a good income, it's easy to get too comfortable. The problem is, getting too comfortable can make you miss problems and bad money habits that could hurt you in the long run. Even though it's nice to take it easy sometimes, try to make managing your money as easy as possible. Automate things so you don't have to stress about it too much. Getting a good credit score is a slow process. It might take a few years to reach your goal. To make it happen, check your credit report and score often. Pay your bills on time, try to keep your credit card balances low, and don't take on too much debt that could mess up your budget. The quicker you get used to these habits and steer clear of credit mistakes, the simpler it becomes to keep doing the right things. That way, you can enjoy better deals on loans, lower rates for car and home insurance, and more benefits. Now that we've covered pertinent insights about common credit mistakes, we'd like to know, what credit tips do you swear by? Share your thoughts in the comments below. Remember, the discussions here are not financial advice. We encourage you to do your own thorough research or consult with a professional to make informed decisions about your finances. If you found this video helpful, give it a thumbs up, subscribe to our channel, and hit the notification bell so you never miss our latest financial tips. Your support means the world to us.